how to make money with inflation. In today's video, we will be talking about inflation, its effect on the economy, and how you can make money from it. First of all, let's define inflation. Well, according to Investopedia, inflation is the decline of purchasing power of a given currency over time. Wherever you are right now, I am probably sure that you are experiencing inflation right now. Remember the good old days when you can buy a lot of things with your money? Suddenly, you just realized that wasn't the case anymore. Indeed, inflation in the US is currently at 7%, which is the highest it has ever been for 40 years. So how is this going to affect the economy, and more specifically, your investments? The investing tycoon Warren Buffett stated that a large rate of returns on your investment would be nothing if the inflation was too high. Couple that with the investing fees and taxes, you probably would lose some of your hard-earned money. Having a 7% inflation rate annually might not sound like good news for a lot of investors. So what can you do to combat the negative effects of inflation on your investment? Luckily, I am here right now to help you and give you some tips on how to invest during a high inflation. Under a market economy, prices of goods and services are very volatile because of so many factors. A sudden and continuous rise in the prices of goods and services would weaken the purchasing power of your money. Fortunately, we have the Federal Reserve to make some adjustments in fighting inflation. The Feds would normally increase the interest rates, which would reduce economic activity, thus lowering inflation by reducing the prices. Peter Lynch, a renowned American investor, stated that a lot of people try to predict the stock market, but it's a total waste of time. But in real life, nobody can predict the stock market or the interest rates. Because when someone could predict it, they would already be a millionaire. So you will be a fool if you try predicting the movement of the stock market. So here is some advice that you can use to help your portfolio during inflationary times. 1. Check and review your portfolio. The first thing you need to do is review your investment portfolio according to your goals. Given the current high inflation rate, it is right to do this sooner. If you have your financial advisor, maybe it's a good idea to rerun a goal projection in your investment using a higher inflation rate. If you're planning to retire in the next few years, you must make sure that your portfolio is strong enough to withstand the inflation and earn you some extra cash to enjoy your retirement. Meanwhile, clients that have invested in fixed income may think of another strategy, as inflation would just erode their investment. Make sure to make some adjustments in the allocations of your assets. Choose assets that have higher appreciation rates, like the S&P 500 and other index funds. Investing in the S&P 500 may not give an ultra-high return, but it could give you a higher chance of beating inflation. 2. Do not be an emotional investor. This next piece of advice is for the investor that immediately panics or overreacts during high inflation. Let me tell you, there's a lot of turmoil that happens in the market, and high inflation is just one of them. Tweaks in the market happen from time to time, and most of it is just short-term. Do not panic immediately based on the bad news that you heard. It is not the end of the world, okay? The Feds will do their best to balance any abnormality in the market. So do not let your fear control you and abandon your investing strategy. But if your investment strategy is just plain terrible, then it might be a different issue. It might be better to invest a high portion of your portfolio in strong and reliable stocks, such as Coca-Cola and Apple, as it offers better protection against inflation. During times of inflation, blue chips company stocks could pass the increase in cost to consumers, thus keeping their profit margins intact. Analysts forecast that inflation may begin to fall after 2022, as the supply chain and labor market begin to go back to the pre-pandemic conditions. However, no one knows how low the inflation will be after the pandemic. Experts say it might be around 3 to 4% at the end of the year, but still, the golden rule is that a good portfolio will still bring profit no matter what forecasts happen or not. Number 3. Be careful with bond investments. This is directed at the people who cannot afford to have too much loss in their investments, or at people nearing their retirement. people riding into the sunset prefer to bond as it is a haven for their savings. Bonds are less risky than other investments, such as company stocks. However, there is still a risk that goes along with corporate and government bonds. When the interest rate falls, bond prices will rise as investors try to capture or lock in the highest rates for as long as they can. This will increase the demand and thus increase the bond prices. So it is just right to assess if bonds are the right investment for you. Number 4. Avoid cash and hold assets. Cash is no longer king. Cash may be the most vulnerable to high inflation. Holding onto your cash for long is like slowly burning it. The value of cash will slowly be eroded by inflation. For example, if you decide to hold $100 cash for a whole year, it will just be worth $93 at the end of the year due to the 7% inflation. Picture yourself holding more cash than $100. The loss will be much worse. Inflation degrades the value of cash, so it is important to invest your money in a diversified portfolio. Invest in assets that can combat the effect of high inflation. An example of this type of asset is real estate. When inflation gets high, real estate prices also increase. The rise of raw materials in making houses during periods of high inflation will result in the price of the real estate going up. But what is great is that the demand for real estate won't be affected much, because every one of us needs a roof above our head. Holding these types of assets gives you a bright future. Another important strategy is to increase income and live frugally. If you are just starting investing, it is a good idea to find another source of income that you can invest in safe assets. Start making money online. We are now in a highly connected world of the internet, so there are a lot of opportunities to make money online. You can apply for a part-time online job that gives you good pay, such as virtual assistant, graphic designer, copywriting, and many more. All you need to have is the willingness to learn highly paid skills. You can also try an online business. Sell any goods and services that you are good at. There is a lot of money going around. You just need to have the perseverance and hard work to earn it. With the additional income and minimizing spending habits, then you can be surer of your finances. Creating a budget plan, always looking for discounts, and living within your means are just some examples of how you can save more money. So before this video ends, it is important to know how to prepare for a period of economic imbalance. I hope that the advice that I gave will greatly help you in achieving your investment goals. For now, I will keep you posted and give you advice on how to be better in your finances. If you want to start your own side hustle and start to expand your income, there are some videos marked below. Get in touch and we will get things moving. If you want to change your life, you need to make a change. If you enjoyed this video, please make sure to subscribe and turn on the notifications bell. Thank you for sticking with me all the way to the end. Take care, stay safe, and I will catch up with you soon.